Hey, good morning, everybody. It is Monday, July 27th, 2026. And if you're watching this and it's not Monday, July 27th, then go ahead and refresh the page until you see today's updated show and make sure you're on the right one. So, especially because I started sending the text out early because everyone said they wanted it out a little earlier. So, anyway, my name is Hammer. I am the founder of Hammer Solutions, home of great products such as Originator Success, Grab and Go Social, and Rate Sensei, products to help my originator friends get more business from Google, social media, AI search, and really just all around. So we got a lot of great products. Be sure to check those out. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time, broadcasting on Facebook and on YouTube, joining you to tell you what's going on with the markets, rate, and pricing. A lot to cover this week. Today's lock advice, you want to go ahead and be cautiously floating. Yeah, that's right. We're actually changing our stance. We've been in a locking stance for over a week. Now we are cautiously floating. So stick around and find out why we are cautiously floating and what has changed. It's important that you know what is going on. So welcome to all the live folks. Good morning, Amy Blauser, Mallory Fodiatis, Holly Johnson, Fawn Crosby, Rob Wilson. Let's see, Sean Segaloff, tired from hitting refresh for 5 minutes. Hey, man, I'm trying to make y'all happy, Sean. You just got to work with me. I go live at 9:30, so on Verizon clock. So, that's what you can use and it takes about a 30-second delay. So keep that in mind as well. All right. So welcome to everybody. Let's go ahead and get started. We'll jump in and get right to it since we've got, 18 people to start with. And I want to respect, since you guys are jumping on early, I want to make sure we're jumping in. So let's go ahead. We'll start off with the technicals. Let me go ahead and bring up the screen. We'll go over all the good stuff here. Taking a look at what we got going on this morning, mortgage-backed securities currently up 16 basis points on the day. You see them in the green. 10-year Treasury yield 4.65, falling back from 4.69, which is where we were on Friday. So quick recap. Let's go ahead and zoom in on what we've got going on here and where things are at. Let me refresh this so that we can scroll over. All right. So taking a look at this section of the screen, it's a recap of what we've got going on. Friday is right here. I'll zoom in on it in a little bit, but what I wanted to show you is that for days and days and days, we saw that bonds were going down, going down, going down. And then on Thursday, we had a big drop and we were continuing to go down. And then Friday, we actually had a day in the green. Now, if you remember, I had said on Friday that was not a trend reversal and that it was, we wanted to be careful on trusting that. And it really is just a day where bonds were catching their breath. So keep that in mind where we were at. If we take a look here at where mortgage bonds have been, we don't want green, we want yellow. Here we go. So where mortgage bonds were last week, we just lost ground. We went red, 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 red. We went down, down, down. Remember, when it comes to mortgage bond pricing, everything on this side of the screen, that is bad. Red is bad. Down is bad. Here was Friday. It was green, and we got a bounce. We got the boink. You bounced up, right? So we got a little bit of a bounce on Friday, but the question was, where were we going to go from there? Now, that really had to do with what happened in the Middle East over the weekend. If we had seen escalated fighting, if things had gotten even messier, this morning we'd be having a very different conversation. Rates would be higher. You need to move your tail out of the camera there, Sophia. Rates would be higher. We would not be liking where things are at. However, we're actually now looking at signs of an actual reversal. So taking a look here one more time at what happened on Friday, mortgage-backed securities did improve on the morning on Friday. But again, we know traders tend to leave early Fridays on the weekend. Things settle down. Sometimes low trading volume will exaggerate the moves. Bonds kind of lost the ground. Ended the day a little bit below where pricing was when it came out. Our lock text alerts, which you can sign up for at www.raytextalerts.com. We sent out a text alert in our wrap up and said, hey, if you did see a reprice better, there were about 15 or 18 reprices better as bonds improved on Friday. If you saw that, you want to really strongly consider locking in on that because we didn't know what was going to happen on Monday. Now, here we are today, and good news. Rate sheets today are going to be a little bit better than where they've been. You see that here. There is a nice jump, a big improvement on rate sheets on the day. And let me see. I am messing around with the screen a little bit to see. No, I don't like that. Nope, don't like that. Hmm. 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 This one puts it down. I don't know. Anyway, so it kind of puts it where I want it above the third, but I'm gonna go with this one for now. And but it doesn't. I wish it brought it up high. Anyway, I'm sorry. I'm getting distracted. I'm like you know how ADHD goes. So as we take a look here this morning, mortgage-backed securities are improved. I promised you that was going to improve rate sheets this morning. What does that actually look like? Well, we saw rates cap out around 6 7/8 on Thursday. Improved a little bit on Friday, picked up a couple basis points in rebate pricing. This morning, we'll get a little bit more. You should be back here 6.77, maybe 6.75. Let's take a look and see where were bonds. On Wednesday, they ended at 99.33. So let's take a look at where was pricing on Wednesday. Wednesday was the 22nd. So yeah, so you're probably only getting about here. So 6.77 again, seeing move in the right direction, going from 6.85, which happens to be the highest that we were at since last July. Actually, if we take a look here, when we were in July of 25. That's the last time that we saw things that were up this high. And here we are at 6.75. We'll zoom in a little bit more and see what we got going on here. So we were at 6.85 rather, now falling back 6.81, should fall back to that 6.77-ish, moving in the right direction. It's a good sign. That should continue for as long as we see good headlines like this one, Middle East tensions easing as the U.S. and Iran pause strikes. We haven't seen any fresh military strikes since last Friday. Man, it's super zoomed in. That's all right. So anyway, haven't seen any military strikes since last Friday. Trump says, give peace a chance. Give peace a chance. So as long as we see that happening, there's minimal risk, and we're in a pretty good spot right now. So keep that in mind. Morning rate sheets, getting a boost from headlines. Trump wants to give peace a chance. There's no military strikes. All right, so we nailed all that. Reprice risk on the day is low. We shouldn't have to worry about bonds getting worse this morning. Currently up 17 basis points. Shouldn't have to worry about any selling. Should be a calm day unless something unexpected happens. Should be a calm day. Shouldn't have to worry about reprices. Now, what's going to move rates this week? It's going to be the Middle East and everything going on out there, as well as the Fed meeting, which will conclude on Wednesday. Starts tomorrow, concludes on Wednesday. We still have a press conference with Fed Chair Kevin Warsh, even though Fed Chair Warsh has said that he does not want to give the markets forward guidance, but markets are going to take what they can out of it anyway. So the rate outlook for the next 15 days, cautiously floating. Again, we're cautiously floating all loans over the next 15 days or so. Let me go ahead and pull up today's written email lock advice, and I'm going to steal from that to tell you what we've got going on with markets. Remember, if you would like to sign up for today for the written email lock advice like this, get it to your inbox each and every weekday morning. It's absolutely free of charge. It is the Rate Sensei. See my little Rate Sensei guy? What do you guys think of my little Rate Sensei guy? Let me know in the comments if you guys like my little Rate Sensei. This is, I've got a bunch of these now, and it's funny because AI can give me different poses, even than the ones that I purchased, when I bought them. But this is going to be my little Rate Sensei guy from now on. We should give him a name too, like besides Sensei. Well, I guess Sensei would just be his name. So anyway, if we take a look here at where does that put us, rates for the next 15 days right here, cautiously float. We're going to see if bonds can rebound a bit. The outlook for rates over the next couple of weeks has improved quite a bit since Friday, as Brent crude drops down to about $90 a barrel after hitting $100 a barrel on Thursday. And that is a big, big shift. And that's a big reason why we can move to a cautiously floating stance. Market's still pricing in a likely Fed rate hike in September, but not in July. So the July numbers, they're currently still at about 66% believe we will stay right where we're at. It's very unlikely we're going to see a Fed rate hike at this meeting. Markets, so still pricing in about a 33% chance that it could happen. Now, if it doesn't happen, maybe that helps rates a little bit. I don't know for sure, but we will see. However, for September, that's already been priced in. It's almost we've got almost a 60% expectation that we'll see a quarter point rate hike, and there's almost a 25% expectation that it'll either be a half a point hike or that we'll have had a hike in July and another hike in September. That's a lot. I'm very surprised to see markets putting this in. Only about a 20% expectation that rates will remain the same heading into September. Now, after this week's Fed meeting, if this column goes up, that's going to help mortgage rates to improve a little bit because markets are currently pricing in a Fed rate hike in September. Mortgage rates currently reflecting the potential for a Fed rate hike in September. If markets ease back on that and grow more optimistic that the Fed is going to be able to fight inflation, but will not hike rates to do so, well, then that's going to help mortgage rates improve. Not dramatically. We're not talking about dropping down to 6.25, but it will help pricing and it will help things improve, which is one of the reasons why we want to go ahead and cautiously float. Now, as we take a look here at the rest of this, rates should improve a bit this week. We'll react to the Fed meeting and Fed Chair Warsh's press conference. Next week's labor data, especially the Friday BLS jobs report. Again, this is not this week. It's next week that we're going to see all that is going to play a role in things as well. Right now, it looks like we could see rates hold steady or improve a bit, mainly in rebate pricing more than rates improving. Rates not likely to improve more than an eighth unless we see some kind of very strong reaction to the Fed that ends up being positive. I don't think the Fed would be dovish enough for that to happen. Dovish meaning accommodative. All right. Rates are still in danger of moving higher if military strikes resume against Iran and tensions rise once again. So we've got to be ready for that. Far as 15 to 30 days, the outlook for rates in the second half of August, still a bit murky. Changes as the conditions do. Right now, though, there's more hope that rates will not rise if talks with Iran can continue and oil prices can continue to fall. Remember, we need to see both straits now that are would be open and letting traffic flow through, letting ships flow through to bring oil prices down. That's the Strait of Hormuz and the Bab el Mandeb, I think. I forget the other one. Bab el Mandeb, I think it is. So I'll look later. Anyway, and then longer term, things have eased back a bit. It looks like hopefully maybe we've seen rates cap out for this round, possibly, depending on what happens if things ease down with Iran and continue that way. So keep all that in mind. Remember, if you would like to sign up to get this email to your inbox each and every weekday morning, sign up at www.ratelockadvice.com or use this cool QR code down here on the screen. You could also sign up for our text alerts, like this alert right here as an example. And we send those a couple times a day, help protect your pipeline, $7 a month, www.ratetextalerts.com. So keep that in mind. All right, let's see what you guys have to say and we'll wrap it up. Ron says the rate sensei needs a hammer cowboy instead of the sensei conical hat. Yeah. Everyone wants the rate sensei with a cowboy hat. I appreciate that, but we've got a theme going there. Now, let's see. It's National Creme Brulee Day. National Creme Brulee, also National Scotch Day. Which are you celebrating? Let me know in the comments. Since today is in the green when it comes to mortgage bonds and we are improving pricing today, maybe today is a day that we can put away the scotch and enjoy the creme brulee. Let me know in the comments. Are you celebrating National Creme Brulee Day or are we digging into the scotch or alcohol of choice? Let me know. And we will wrap it up. So again, I have sped these up a little bit, kind of made the show faster. Let me know what you guys think. If you're happy with that, if you're happy with the new format, let me know in the comments. I really would like to hear your take on this, about getting done a little bit faster. Also, don't forget to check out our products to help you get more business. Go check out originatorssuccess.com. Also check out grabandgosocial.com. Originator Success will help you be found, be chosen, and be remembered. We get you out there. Build your online presence, Google profile, your online profiles, help you to generate reviews and help you stay in touch with past clients, agents, and prospects. We got our weekly rate forecast that goes out every Monday, like today. It's basically a turnkey, set it and forget it type product. If you want something more hands-on to help you get more business from social media, you know you need to do more, but you don't know where to start or you're not consistent, check out Grab and Go Social. We can help you with that there. So, all right, my friends, good morning, Nathan Einkorn. And appreciate the rest of the comments. Y'all have a fantastic day. I'm going to wrap it up again. Thank you. Ooh, a renewal life insurance medical exam in 4 days. So yeah. Well, good luck with that one too. So, all right, I'll see you guys tomorrow. Take care, everybody. Make it a great one. Bye bye.